What happens when billions of dollars are wagered against one of the world's most closely watched space companies? That's exactly what's unfolding with SpaceX. Short sellers have dramatically increased their bets against the stock, even as CEO Elon Musk insists those betting against the company are making a costly mistake. The timing is especially interesting. SpaceX is about to report its first quarterly earnings as a public company, a milestone that could shape investor sentiment for months to come. At the same time, upcoming lockup expirations could introduce additional shares into the market, creating even more uncertainty. So why are bearish investors becoming more aggressive? Why does Elon Musk remain so confident? And what could these developments mean for shareholders, future investors, and the broader market? Let's break it all down. SpaceX has been one of the most anticipated public listings in recent years. After years as a privately held company, investors are finally getting the opportunity to evaluate its financial performance through regular public reporting. Since its market debut, the company has remained under intense scrutiny. Supporters see a business with leadership in commercial space launches, a rapidly expanding Starlink satellite network, and long-term ambitions in advanced technologies. Others believe the company's valuation already reflects much of that potential, leaving little room for disappointment. That difference in opinion is becoming increasingly visible in the stock market, and nowhere is it more apparent than in the growing number of investors betting the shares will decline. Short sellers increase their bets. According to estimates from financial analytics firm S3 Partners, approximately 206 million SpaceX shares are now sold short. That represents roughly 32% of the company's publicly tradable float, translating into about $25 billion in bearish positions. The increase has been remarkably fast. Just 1 week earlier, short interest stood at approximately 185 million shares, or about 29% of the float. Go back about a month, and the numbers were dramatically lower, around 40 million shares, representing only about 5 to 7% of publicly tradable shares. In other words, bearish investors have significantly expanded their positions in a relatively short period, signaling growing skepticism ahead of several major events. But that naturally raises an important question. Why are so many investors choosing this moment to bet against SpaceX? The answer lies in what's coming next. Major catalysts are approaching. According to Matthew Unterman, head of research at S3 Partners, short sellers are increasing their exposure ahead of several important corporate milestones. One of the biggest is SpaceX's first quarterly earnings report as a publicly traded company. The company has confirmed that it plans to release those financial results after U.S. markets close on August 4th. For investors, this earnings report is much more than a routine update. It will offer the first detailed look at SpaceX's financial performance since its initial public offering. Revenue trends, profitability, operating costs, and management commentary could all influence how investors value the company going forward. In addition, markets are also watching future lockup expirations, which may allow more existing shareholders to sell previously restricted shares. An increase in available shares can sometimes place downward pressure on stock prices if selling activity rises. These upcoming events explain why both bullish and bearish investors are paying especially close attention over the coming weeks. Elon Musk pushes back. Despite the surge in bearish bets, Elon Musk remains publicly confident about SpaceX's long-term future. Responding to the rising short interest on X, Musk argued that firms maintaining significant short positions against SpaceX face very poor odds over time. He also reiterated a statement he has made before, that if SpaceX achieves its long-term goals, he believes the company could eventually become worth more than the entire Earth's economy. While that reflects Musk's personal vision for the company's future, rather than a measurable financial forecast, the message was clear. He believes SpaceX's long-term growth potential far outweighs the concerns currently driving short sellers. His comments quickly attracted attention across financial markets, adding another layer of debate ahead of the company's upcoming earnings release. Why investors remain divided. The sharp rise in short interest highlights just how divided investors have become. Supporters argue that SpaceX continues to dominate the commercial launch industry while expanding Starlink's global satellite internet business. They also point to the company's broader ambitions in areas such as artificial intelligence and advanced technology development as reasons for long-term optimism. On the other hand, more cautious investors question whether the company's current valuation already reflects much of that future potential. Their concern isn't necessarily about the quality of the business itself, but about whether expectations have become too high. That difference in perspective is creating one of the most closely watched debates in today's market. And with the first public earnings report just around the corner, investors won't have to wait long for new information that could either strengthen the bullish case or give short sellers more confidence. The market's first real financial test. For months, investors have debated what SpaceX might be worth based largely on its long-term vision and growth story. Now, the conversation is about to shift towards something more concrete: financial performance. The company's first quarterly earnings report as a publicly traded business will give Wall Street its first official snapshot of how the company is performing under the scrutiny that comes with being public. Investors will be looking beyond the headline numbers. They'll pay close attention to revenue growth, operating performance, and any guidance management provides about future priorities. Just as important will be what executives say about the company's different business segments and how they expect those operations to evolve over time. For supporters of the stock, strong results could reinforce confidence that the business is delivering on expectations. For short sellers, any signs of slowing momentum or unexpected challenges could strengthen the case that the stock's valuation deserves a closer look. That's why this earnings release has become one of the most anticipated events for the company since its public debut. Why lockup expirations matter. Another event investors are watching closely has nothing to do with earnings. It's the upcoming expiration of lockup restrictions. When a company goes public, early investors, executives, and some employees are often prevented from selling their shares for a specific period. These restrictions are designed to avoid a sudden flood of selling immediately after an IPO. Once those lockup periods expire, however, eligible shareholders may choose to sell some of their holdings. That doesn't automatically mean heavy selling will occur. Many long-term investors decide to keep their shares. But the possibility of additional shares entering the market is enough to attract attention from traders because a larger supply of stock can influence price movements if selling activity increases. This is one reason some bearish investors are positioning themselves ahead of the upcoming expiration dates, while long-term shareholders continue to focus on the company's broader growth strategy. Analysts continue to see long-term opportunity. Even as short interest has climbed sharply, not everyone on Wall Street shares the bearish outlook. On Tuesday, SpaceX shares rose about 3%, ending a 7-session losing streak. The move came after analysts at Macquarie reaffirmed their outperform rating on the stock and encouraged investors to view the recent weakness as a potential buying opportunity. Following the gain, shares traded at around $124. Even so, the stock remains below its $135 initial public offering price, reflecting the pullback that followed its market debut. For many investors, this creates two very different interpretations. Some see a company whose stock has simply cooled after the excitement surrounding its IPO, presenting an opportunity for patient investors. Others argue that the decline suggests the market is still adjusting to what they believe is an ambitious valuation. The coming weeks could provide new evidence to support one of those views. What investors should watch next. As the earnings date approaches, several developments will likely shape the market's reaction. First, investors will examine whether SpaceX's financial results meet, exceed, or fall short of expectations. Second, management's comments about future growth plans could influence how investors think about the company's long-term prospects. Third, traders will continue monitoring any changes in short interest. If bearish positions continue to increase, it may signal that some investors remain unconvinced despite the company's long-term ambitions. Finally, attention will also remain on lockup expirations and whether they lead to meaningful selling activity or simply become another event the market absorbs without major disruption. Taken together, these factors will help determine whether recent volatility is only temporary or the beginning of a longer debate over how the market should value one of the world's most closely watched space companies. And that sets the stage for what could be the most important chapter in this story. In the final part, we'll look at why this situation matters beyond SpaceX itself, what both bullish and bearish investors are trying to prove, and the key takeaways every investor should keep in mind. The bigger picture for investors. Whether you're bullish or bearish on SpaceX, the next few weeks could be pivotal, not just for the company, but for how investors evaluate newly public, high-growth businesses. The sharp increase in short interest shows that opinions are deeply divided. On one side are investors who believe SpaceX's leadership in commercial launch services, the continued expansion of Starlink, and its long-term innovation strategy justify a premium valuation. On the other are those who question whether the current share price already reflects much of that future potential. The upcoming earnings report won't settle every debate overnight. A single quarter rarely defines the long-term outlook for a company of this scale. However, it will provide something investors have been waiting for since the IPO official financial data. That information could help markets move beyond expectations and focus more closely on measurable business performance. It's also worth remembering that elevated short interest doesn't automatically signal weakness. In some cases, it reflects genuine concerns about valuation or future growth. In others, it simply highlights that investors have very different views about where a company is headed. For now, both sides are preparing for the same set of events. The difference lies in how they expect those events to unfold. As things stand, approximately 206 million SpaceX shares are sold short, representing about 32% of the company's publicly tradable float and roughly $25 billion in bearish positions, according to estimates from S3 partners. Meanwhile, Elon Musk remains unwavering in his confidence, arguing that maintaining a significant short position against SpaceX is unlikely to succeed over the long run. Over the coming weeks, investors will be watching several key developments: the company's first quarterly earnings report as a public company, management's outlook for future growth, and the market's reaction as lockup restrictions begin to expire. Those events could reinforce confidence in SpaceX's long-term strategy or provide new fuel for investors who believe the stock is priced too aggressively. Whatever the outcome, one thing is certain: SpaceX remains one of the most closely watched companies in today's market, and its next moves will likely be followed by investors around the world. As always, we'll continue tracking the latest developments and break down what they mean for investors, businesses, and the broader economy. If you found this analysis helpful, consider subscribing for more fact-based coverage of U.S. markets, investing, business, and financial news. Thanks for watching, and we'll see you in the next video.